It cannot be ruled out that Wirecard AG has become the aggrieved party in a case of fraud of considerable proportions.
It starts with looking at complete failure of a senior management, despite many hints to discover the facts. It goes on to the scores of auditors who couldn't dig up the truth, and it goes on with a whole range of private and public entities, including my own, who have not been effective enough to prevent something like that happening.
Ganz große Wachstumsbereiche natürlich in diesen Daten gibt.
Well, for more on this, Daniel Lacalle joins us now from London. He's Chief Economist at Tressis. Great to have you back on the program, Daniel. Now, before we get into what may or may not have happened at Wirecard, can you just tell us about the significance of the company? How big is it, and what sort of a player is it in the fintech world?
Very important. It's the largest in Germany, certainly, and the biggest contender in terms of wire transfers and applications in the fintech technology. It's certainly one of the most important European, if not the most important European player in the fintech world.
Now, it is quite a spectacular fall from grace for the company, isn't it? But we know the Financial Times has been reporting on allegations of fraud and impropriety at the company for the last 18 months. So why is it all coming to a head now?
It's very interesting because it was the regulator in Germany that actually filed a complaint against the investigations made by the Financial Times and the comments made in different reports by a number of hedge funds that were talking about the use of some accounting gimmicks that were known before, for example, in cases like WorldCom. Remember that they used a strange way of accounting for the levels of cash that they actually had. That investigation led to a complaint from the regulator. And this basically just faded away for a while. This was, I think, in April last year when everything came up. But this year, the company started to drag its earnings report. Also, the audit was being delayed, and there were a number of reasons that were given for it. And the company seemed to be very adamant that everything was fine. But obviously, it now has come to a massive scandal.
It sure has. And one of those auditors, EY, had earlier refused to sign off on the account, saying that it didn't know where $2.1 billion was at the company, quite interestingly. Now, the company said that that money should have been at 2 banks in the Philippines, and the Central Bank of the Philippines has since said that no such transaction was ever made. Now, the company seems to have changed its story yet again, saying the money may have never even existed. So what do you think happened?
I think that what was happening was that the company was accounting as cash transactions things that actually did not become real cash flow. And it was putting those figures in something that seemed to be escrow accounts that did not exist. It seems that they don't exist. We don't have all the information now. But and the reason why the company was saying that the money was in the Philippines or places that were very difficult to address is because by that, maybe what they were trying to do, and this we don't know yet, is to get the auditors to sign on the accounts because they were unable to trace those accounts. For an auditor, it is relatively simple to get the statements of banks in the Eurozone or in the United States, etc. But sometimes they don't dig up on figures that come up from banks in more different countries, not in Asia or something like that. That has changed significantly since the financial crisis in 2008 and since the dot-com bubble and the cases of Enron and WorldCom. So now, for example, most auditors actually dig up every single account, no matter where the country is.
Now, given that these allegations have been around for at least a year and a half, do you think then this was a failure of German regulators?
I think that this would have not been solved by regulation. I think that the fact that the regulator was so aggressively working against the people that were actually raising questions about this shows that in many cases, regulators in countries tend to look at companies within their own country in a sort of sacred way. And we saw that, for example, in Spain with the case of Gawex, which was also a fraud of significant proportions, not even close to the level that this one is, in which the first response from reports coming from short sellers, from hedge funds saying that the accounts are fraud, returned with a very aggressive response from regulators. I think that regulators should listen more to hedge fund managers and to reporters, because when there's noise, there tends to be something behind it.
It sure does, especially in this case. Daniel Lacalle from Tressis in London, thank you so much again for your analysis.